So hello, everybody. Don Garman here from Mirador Capital Partners with Dan Murray. And why Dan Murray is going to be joining me today will be clear in a minute. I wanted to come on because I'm getting a little bit of a complex because the response to Jonathan and Lauren has been so overwhelming that we thought we would slow the momentum down and give you another look at me. So I want to get three things accomplished today. I want to introduce Dan, who a lot of you have met, but some of you haven't. I want to give you guys a recap, or Dan and I can give you a recap of our investment committee meeting, which concluded about 20 minutes ago or 15 minutes ago. And then Dan and I are going to have a discussion about something that Dan is a full-blown SWOT level expert on, which is a question we've been getting intermittently the last couple of weeks, which has to do with stock options. And so I'll give Dan's professional introduction a little bit later when we start that discussion. But for those of you who don't know, Dan, I did the math earlier today. I've known you for 31 years now. So Dan and I met in 1989. One of Dan's good pals turned out to be one of my college roommates, which is how Dan and I were introduced. And for those of you who don't know the details, I actually met my wife, Mindy, who most of you have met, at Dan's house that he grew up in on Belvedere Island in Tiburon. And we'll tell that story down the road. But obviously, not working with Dan for the first 15 or 20 years of our career, but getting to work with him for the last, I don't even know, 8 years, 9 years.
Yeah.
Yeah. So happy to share the story on how that came to be as well. But Dan's one of my best buddies. Super grateful to him. I've said it before. If you don't like Dan Murray, it says more about you than it does about Dan Murray, because Dan's one of the great guys out there. But anyway, so Dan, please feel free to jump in here.
Sure.
Wanted to give everybody an update on our investment committee, which just wrapped up, how we're sort of handicapping and laying out the next, I don't even know, not days, because nobody can do that, but weeks and months, I think, is probably more appropriate. I believe it's safe to say that the investment committee at Mirador has sort of coalesced around a couple of different ideas, the most important of which is fundamentals for us do matter. And as we're looking at where we are market-wise and timing-wise, you guys have seen the little earnings per share schematic I throw up from time to time. You remember early on, or several of these videos ago, when I was saying, gosh, they're still calling for earnings to grow in 2020. Now we see that earnings, in fact, have come down, but to our eye, they have a lot farther to go. So what has held us in good stead over the last 25 years is kind of following the direction of earnings. And while earnings are still declining and still have so much farther to go, for us, it's just not the time to abandon defense as a philosophy and go all in on offense. We have done that over certain periods of time, and now is not the time to do it. So we're leaving our defense off on the field, which, as many of you know, what type of the ways we attempt to do that. And but we have laid out a process for how to unwind in either direction. So I think it's people like the idea that we're going to sort of play the stock market a little bit more than we do. And I don't think it's necessarily our role, and nobody really is good at that, playing the stock market, rushing in to buy airlines or cruise lines, or trying to pick the bottom in certain segments of the market, or really getting cute with large percentages of the portfolio. It's not important that we do that, and I want to explain why. For the vast majority of our client base, the outcome is asymmetrical. What I mean by that is our clients are hurt more by a dollar lost than they are helped by a dollar gained. So most of our clients are well past the line of that they need to be past in order to kind of have their resources stretch, and taking a lot of risk that would put us in a position to get pounded it's not wise, and it's not smart strategy. And I'm specifically referring to the long view. We do that in other strategies, and we will continue to do that, and we've done it well. But in the long view strategy, where again, more than half of our client base's assets rest, it is not Dan, I think it was 20 years ago when I think I first said, we specialize in never needing a dramatic comeback, right? And so this year is a good example of how that feels, which is in the bleakest parts of the virus news headlines 3 or 4 weeks ago, whenever that was, we were not even half of the downside of the markets. And, and of course, when the markets recover as unexpectedly as they have in this relatively short amount of time, we don't come back as far as fast because we never went down as far as fast. So it's a style that we have played for almost 30 years or 28 years, and it's held us in good stead in some really rocky times. And so that was the first conclusion of the investment committee today. Dan, is there anything you wanted to add or that I missed?
No, I think you kind of covered everything that we just talked about.
Yeah, I mean, we went over our long positions, which we like. I mean, obviously, I have a great track record of coming on the green days. So maybe we'll have to start doing these daily to keep the screen green. But I know the last few have been on big up days for sure. So rather than, try to guess why the screen is green or, try to scale, less bad news and is that good news, I don't think we need to get that cute. We're going to follow the direction of earnings. Earnings are still going, as I said a little while ago, from the upper left to the lower right. They are going down. And to me, they absolutely will continue to go down, and they're going to go down a lot more from here because we're all at home, and it's going to be hard for companies that, to make a ton of money when nobody's doing much. So that's that. So Dan, if you wouldn't mind, and I'll give it for our viewers. When Dan and we were friends, I started my career, he started his career. Early in his career, he was a trader in a stock options trading pit on the Pacific Stock Exchange, where his job was to make a market, right, Dan, in options that, stock options. And so one of the themes that's currently out in the world is that you can make money using stock options, and you can sell them against your stock portfolio or buy them if you want to call the direction of the market, and you can make a ton of money. So I'll save my editorial comments about that, Dan, but I want to let you kind of put some color around the early parts of your career, and then I'll go ahead to say he ran a hedge fund after his trading career was completed and concluded, and we stayed friends throughout. And at some point, after 20 years of the career, he was wondering what he wanted to do next. One thing you may not know about Dan Murray is his level of empathy and compassion I would put up against any other human in the world, which makes people generally pretty good financial advisors when you understand the financial stuff and you understand the people stuff, which Dan does very well. And he's got a lot of new clients that he's brought on board, and some of them are even on this little video here. So Dan, you want to say anything else about your career?
Sure. Yeah. The first thing I did out of college was I was a runner on the Pacific Stock Exchange. So essentially, the guy gave me a ticket and said, go there. And within 18 months, I was trading. A trader backed me, and we ended up being partners for a number of years, better part of a decade. And we're still good buddies to this day. I've traded every type of option there is. I don't trade them on a daily basis now. I don't think generally that's suited for the retail investor. It's we were talking about like what a metaphor is for options. It's kind of like a if somebody just dropped a table saw off in your house, and said, a carpenter, you can use it a lifetime, make a career out of it, and never lose a finger. But if you drop it off in somebody's house and said, hey, we need to cut and rip a 20-foot 20-foot beam, they'd probably lose an arm. Options are the same way. Like you need to have an intimate knowledge and expertise of all the pricing components and the risk factors around it, whether they what can go right, what can go wrong. So, and generally the market makers know what they're doing. They have the options priced correctly. So it's not something you want to to do on a daily basis. And if you just kind of do a straw poll of all your friends,
yeah,
the odds are that you're going to have the kind of unindoctrinated retail customer have more negative experiences than positive ones.
Yeah.
You know, kind of diving in like that.
Okay, so here is a question I'm going to throw your way, which is we could be entering a multi-year period of high volatility, which if you don't know the relationship between volatility, it tends to drive up the premiums in options and perhaps capped upside, right? There's a certain point of view that all the debt that we're putting into the system, it's really going to impede companies' functionality, which will sort of slow growth over the next decade or could. Wouldn't that be a good environment? And also, right, they're talking about companies maybe having to cut dividends. So would this be potentially a scenario where a professional such as yourself, we could start to use options to create additional income, perhaps in the income strategy?
Yeah, that's a great question, and it's something that we thought about in the investment community for a while. But when is the right environment to implement some sort of like option income generating strategy? And let's say the recovery is L-shaped, so we come down, and then we go sideways. In that scenario, you can generate income two different ways. You can sell puts instead of buying stocks outright. When you sell something, you collect the premium, and you can also sell calls against stocks you already own. Now that premium you collect, and if the stock settles at above or below where your strike prices are, then you'll collect the premium and you can go do it again. If not, you have to deliver on what you wanted, and the net result would be you either bought the stock at the price you wanted and collected the premium if you sold the put, or if you sold calls against stocks you own, you sold it at a level you were probably comfortable selling it at anyway. So the X factor is what you alluded to before, is one of the pricing components of an equity option is volatility. Mm-hmm. And right now, the volatility pricing components across the board, which is measured by VIX, which is the VIX, which is the pricing component put into the S&P 500 equity options. I know there's a lot, but the thing you need to take away is the VIX is at an all-time high, and it's a sustained all-time high. It's I didn't look at it today, but it is traded as high as the high 60s and 70s, whereas it generally likes to reside around 10 to 12 during the last 11 years.
Right, like so December of this year.
It made very little sense to sell 10 or 12 volatility upside calls because the premium wasn't all that great. Mm-hmm. You were much better
you're trading
off.
away your upside for not much money.
Exactly. And so now, if we're in some sort of L-shaped recovery, then with high volatilities, then you have two things working for you. You're taking advantage of the income opportunities of selling a high volatility option against stocks you own, or entering the market at a high volatility and reducing the purchase price of a stock if you're selling puts.
Yeah. So thank you for that. I think what I want to reiterate to anybody watching is there have been a lot of articles or YouTubes that make it seem like casual option trading is like a pot of gold, like a free money, exercise. And, I think what I wanted to show is that Dan, who has done this professionally, and we are always evaluating things that may be additive to the strategies or to individual situations. And this is definitely something that in the right situation, and I think where Dan has been very good is when we have clients that have a very specific thing they're trying to achieve with a concentrated stock position or one particular point of view on the direction of something, then you can find an option that will in essence lever up your whatever your call is. It'll lever it up, right, for less money.
Or I'd say take risk off. If they have a concentrated stock position and we're looking to do a no-cost collar or some other thing out in the future because they know they have a cash need at a certain date, that's a use of options that actually takes risk off.
Yeah. Yeah, that's a good point. So the point is, use them for the specific need, right? That you're trying to achieve, and don't generalize how easy it is to do this and make money.
As a speculative tool,
Yeah.
they are very, very dangerous.
Yeah, the metaphor I used was they're like firecrackers, right? They can, if you use them properly and responsibly, they can add a nice effect. But if you use them wrong, you can blow off your fingers in a hurry.
Yeah.
So we don't want anybody to do that.
Losing fingers all over this podcast.
Yeah. So I think for the purposes of this, we could probably leave it there. If you have more questions about stock options or anything else, get in touch with us. I mean, I don't have anything new from the perspective of, I feel like our strategies are doing exactly what they should do, which is what we always have them designed to do and what we care about the most. And in the meantime, we hope everybody's safe. I hope you all had a nice Easter. All I said to my family about Easter is, it is one we will never forget. That is absolutely true.
Yeah.
So, Dan, you have any parting words?
No, I just want to thank everybody for all the kind words of support. Don, I got to say that, our clients are really, really special. They are part of the Mirador family, and it's an honor to be able to serve you guys and communicate with you, especially in extreme times like it is now.
Yeah, couldn't have said it better, Danny. And to you on a personal level, for all you've meant to me and my family and the great guy you are, thank you for everything. No, truly appreciate you, bud.
Likewise, Don.
Okay, guys, until next time.